The following is a presentation of TFNN, live at TFNN, the Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 15th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that is what you and we must master each and every day. So let's begin with a couple of empowering beliefs. You know, I always like to say, live life fully while you're here. Experience everything. Take care of yourself and your friends. Have fun. Be crazy. Be weird. Go out and screw up. You're going to anyway. So you might as well enjoy that process. Take the opportunity, though, to learn from your mistakes. Find the cause of your problem and just simply eliminate it. Don't try to be perfect. Just be an extraordinary example of being a person. You know, I believe that life is a mirror, and life will reflect back to us that which we think. My favorite expression about mirrors is turn your mirrors into windows. It means look in the mirror, see the person you want to become. I say become because we are always improving, and then take massive action and jump through that mirror. Turn your mirrors into windows, folks. Let's go check out the mirrors of the markets. Right now, we've got the Dow is down 32 points, trade out at 15,268. S&P is off 3 at 1706. Composite up 2 points at 3817. It just won't die out there. Russell 2000 down 3.5 points. Apple up $2 and change. Microsoft up 47 ticks. Google up $4 and change. Cisco up a penny. Intel up 13. Leading the charge to the upside this morning, we've got Tesla Motors. It's up $8.50. You've got LinkedIn Corp up about $6. That's up 2%. FedEx up $4 and change. It's up nearly $5 now. 4.5%. They're buying back some stock. Google's up $4 and change. Pioneer Natural Resources up $4. Priceline up $4.50. Qhoo 360 Technology up $3 out there. To the downside, Teradata being torn apart this morning. Torn apart, I suppose. Teared's not a really good word. I don't think it is a word. But torn apart, it's moving lower with conviction. It's down 16% off $8 and change. Caesar Entertainment as well, taking out a swing point. It's got volume. We'll see if it can take out that swing point. It's off about 15%. Netflix down 1%, a little over 1% off $3. Fleur Systems, FLIR, up off 9%. Domino's Pizza, a little indigestion this morning. It's down $3, about 4%. Commvault Systems down 2.5% off a couple of bucks. F5 Networks down 2%. That's off $1.80. Our call number is 877-927-6648. Give us a call, folks. We can certainly take a look at your stock chart. Now, I've got the Euro Japanese yen on my screen here, so I kind of left off with that. So the reason why I'm taking a look at this is because this is the currency pair that tracks the U.S. stock index better than any other currency pair out there. And this formed a 1 to 2, A to B equals CD. It broke through a rising price channel that's out here. When you break through a price channel, price will typically claw its way back, try to make its way back up there. Inside on the 30-minute chart is what we're looking at here. We had the Euro, Japanese yen get to the extreme oversold condition. When you get down to that level, the rubber band is going to snap on any time frame chart out there. So if you want to understand the breathing patterns and what to be paying attention to, what to look for. And now we're going to be watching the Euro, Japanese yen. It's moving higher. Our stock markets here are moving higher. We really want to pay attention to what happens as the Euro Japanese yen gets up to the bottom of that rising price channel. Because if, in fact, it can get inside that rising price channel, what that will set up a big move higher inside our markets. Because at least the currency pair, at least the fuel, the rocket fuel of the markets will be pointing to higher price out there. So that's on the Euro Japanese yen. If we go take a look at the indexes, see what they're doing out here right now, we'll start off by taking a look at the the S&P 500. Then we'll go take a look at the SPY. You can see yesterday the S&P 500 making its way up to the 0.786 retracement level. It's a normal area where you'd let people off of the bus. 1712.01 is the exact number. What it hit yesterday was 1711.03. How about that? With less than a dollar away from hitting the exact 0.786 retracement area. Now, that's coming from the swing point high that was placed on September the 19th. That's the high. The low was put in on October the 9th out here. We'll see if this area holds out here, if it just moves. So now look at those wide-ranging bars coming in there. I mean, that is the bulls, in control of the marketplace. And it looks like they're stepping back in here this morning as we speak. And so you've got the currency pair, which is moving out of a oversold condition. So that's moving the futures markets higher. That's moving these markets higher out here. If, in fact, we see the S&P get over the 1712 area, then it'll go make that 100% move and get back to the high volume swing point out there from September the 18th. That says that it will. Now, it's inside that bar already. So if you take a look at the S&P 500, this is important to understand. You're already into that swing point. You're already into that high volume bar, I should say, because it made a slightly higher high in the following session on September 20th. So September 19th. So that really qualifies as the swing point. But this is so close. I mean, the high on September 18th was 1729.44, 1729.86. That we're going to go ahead and just 40 cents. We're going to go ahead and give credit here where credit is due, and that is to Uncle Ben Bernanke Day on September the 18th. Big volume up there. You're inside that bar that says it wants to at least go test the highs, 1729. Gets over the highs because there is a confirmed A to B equals CD up. That takes you up into the 1776 range, and you're trading at 1708 right now. So that is a big move northward inside the S&P 500. That's what it looks like here as we speak. If we take a look at the Dow right now, Dow is trading off 19 points. It's made its way back to the 0.618 area. Inside the Dow, that number would be 15,331. The actual high from yesterday was 15,309. But close enough. We took a look at the futures contract during the first show, and what we saw was it actually made the 0.618 level a normal place where you would let folks off the elevator. But it's so strong here, it may say, you know what, Steve-O, I want to go up to the 0.786 level. And actually, what it may want to really do is get in. Now, it's also got a high volume bar, which is on September 18th, the low of which is 15,470, the high of which is 15,709. So it looks like that is where it wants to head to, and then that will tackle trying to get into that rising price channel out here. Last time that it got out of it, it was able to get back in and just kind of jiggered around out there, wasn't able to hold, and then we saw that move lower to come back and test those June 24th swing point areas. Not enough to bust it down. Now we'll go see if it can bust it up to the upside. That's inside the Dow. If we take a look at the Russell 2000 swing point, we've already seen it close above that area. That was from October the 2nd. The high is 1087.39. Yesterday's close above that, it closed at 1090 out there. So all that the Russell 2000 is going to do, it's going to go ahead and complete its A to B equals CD up. The question is going to be, is it going to complete a 1-to-1? Or is it going to complete a 1 to 1.272? 1-to-1 will take you to 1129. You are at 1088 right now, so you take things one day at a time. That's about a 50-point move, just shy of about a 50-point move inside the Russell 2000. So that would be a nice move. The 1 to 1.272 A to B equals CD would take you to 1162. And a little bit of change out there. So that's where the Russell wants to head to. We take a look at the NASDAQ out here, strong like bull. But the Russell 2000 actually stronger. If you take a look at the October, it looks like October 1st. Let's see, 38.17.98, 38.19. October 2nd is its swing point high. 38.19.28. You're at 38.18.99. So it's going to try to take that level on today. Don't be too concerned about this rising price channel out here. In fact, I would say as it continues to move higher, we might move the upper threshold line out here. What's important to note here is on the pullback that we just recently saw, nowhere near getting towards the bottom of that rising price channel. So the NASDAQ composite, I've been saying here for months, just strong as can be, especially when we took a look at the weekly chart. There were no bullish or no bearish candles out there at all. And the weekly chart, that's got the dominant trend in place. If we take a look at the NDX 100, that's up and over its swing point high, October the 2nd, 32.56.71. You're at 32.62.75, so no back off here. This has a A to B, confirmed A to B equals CD up as well. That says 33.77. You're 32.63 right now. So 33.77, that's the next level. But I suspect in taking a look at this pattern, we're looking more like 34.65 out there is where it wants to actually go ahead and travel to. And that is on the NDX 100. If we take a look at the New York Stock Exchange, continuing with its gains yesterday. In fact, let me take a quick peek here while the market's down just a tad. Right now, the New York Stock Exchange is down 18 points. Net declining issues, 788. It needs a total of 899 plus net declining issues today in order for the bears to take control of the market. Otherwise, the bulls still have control. The oscillator, both volume and price oscillators are above zero. Summation index is pointed up and says New York Stock Exchange actually wants to travel to about 10,100. That is the area where you've got two A to B equals CD patterns. And this one here, the price movement off of the C point of the current A to B equals CD is also just as strong or stronger than the one that already has a confirmed A to B equals CD up in. That was one coming off of the lows here on August 30th. So a very strong move inside the wider breadth of the market being the New York Stock Exchange. We go take a look at the ETFs out here. We'll go see what they're doing. We'll peek in first on the SPY. Yesterday, the SPY, if we take a look at retracements, you'll see it also getting to that 0.618 level, beyond the 0.618 level. You can see kind of slicing through that with some pretty decent volume yesterday, holiday, Columbus Day. So volume-wise, put it in perspective, 112 million shares yesterday versus Friday, not a holiday, 105 million shares. So volume, pretty darn decent yesterday. This says 171.66. That's your 0.786 level, but that's really not where the SPY is headed to. And also, it closed inside, again, that high volume swing point. You can see that on my screen here if you're watching us on Tiger TV. September 18th, the volume there was 203 million shares. But look, at 203 million shares, that was taking out the swing point from all the way back in August 1st, August 2nd. That only had 110 million shares and 91 million shares respectively. So there's your confirmed A to B equals CD up. That says that the SPYs can most definitely travel to 178 and change out there. That will take it back into the top of that rising price channel. I believe that is where the SPY eventually wants to head to. Let's go take a look at the Qs out here. That little rocket ship, the Qs right now are priced out at 79.88. That is above the swing point from October 2nd. Of course, we know that the Qs confirmed an A to B equals CD up back on September the 9th, that with 25 million shares, taking out a swing point with 23 million shares. That 1-to-1 A to B equals CD, and the Qs 82.80-ish, but really 84.90-ish is where the Qs want to be able to travel to when they get ready to take off again. We take a look here. We'll have to take a look at it when we get back from this break. Our call number is 877-927-6648. Dow is down 31 points. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 27 points right now. S&P down 1.5. NASDAQ is up 3. NASDAQ 100 up 7 points out here. New York Stock Exchange off about 21 points. Not a big deal. Goldilocks down $5 right now. Silver really clawed its way back. It looks to me if it's only down 16 cents, must be a hammer candle inside of silver. Still a lot of trading left in the day. We'll go peek in on silver as soon as we, and gold, as soon as we finish off taking a look at the ETFs out here. The IWM yesterday closing above its swing point high from October the 1st. That level was 107.93. Now, volume on that was 39 million shares. Yesterday, we did 38 million shares. Columbus Day. It's a holiday out there versus October 1st. I don't recall that being a holiday out there that had 39 million shares. And we already had a confirmed A to B equals CD up in the IWM. That's strong. That's absolutely strong, folks, out here. So, volume yesterday, in my opinion, pretty darn good. PDG out there. This says that 111.98. Nah, it's not where the IWM wants to stop. The IWM wants to run up to at least the 115 and change level out there. But 111.98, 112, that's going to be its next stop on the way up. This thing is on a tear and has some nice volume behind it. Let's take a look at the diamonds. The little weak puppy out here. As far as retracement-wise, if we take a look at from swing point high to low, that's going from September the 18th down to the low on October the 9th out here. What we can see is that it is close to the 0.618 retracement level, but more importantly, more impressive than that, inside of the Dow, it's gotten back inside that trend line. This is the trend line that I'm referring to coming off of the November 16th low, as well as the channel line coming off of the November 16th low. That is a powerful, for something that was the weak link out there, pretty darn powerful move out there. So it wants higher price. Yesterday's volume, 6.4 million shares. Not so much a big deal out here, but it's going to at least move into that September 18th swing point. That's got 9.6 million shares, the low of which is 154.65, the high of 157.06. Now, if it's coming in there with a volume, that would be extremely bullish for the markets entirely out here. So we'll see if it's going to be the Russell, the NASDAQ 100, the Qs, the composite that just simply pull the, and even the S&P that go ahead and pull the Dow up. Now, speaking of pulling the Dow up, let's actually go in and check in on a couple of core stocks out here. Let's see how they have been behaving or misbehaving. Let's start with IBM. So IBM is going to be out with numbers. Let me see. I know I've got it out here on my screen. So this is this morning. This is after the close is Yahoo. Tomorrow morning we got Bank of America, BlackRock, Mattel, Pepsi. Then in the afternoon, we have IBM. So tomorrow afternoon, we've got IBM releasing numbers out here. Now, IBM pulling back here this morning. Volume-wise, it's down with 667,000 shares. Yesterday was up with 2.6 million shares. So the pullback here is on a little bit heavier volume than one might like to see. But what we can say about IBM right now, the chart pattern shows this. It is back inside that long-term consolidation, that 30-point consolidation. In fact, if we go ahead and we put this on a weekly chart out here, all that it really did was it got down to the bottom of the consolidation, never broke it on the weekly chart. The daily chart shows the break, but that's why you want to go ahead and you want to make sure that you're taking a look at different time frame charts out here. So the message of IBM right now is that, in my opinion, is that the message here, because it tried to break through the consolidation level, it couldn't break through it. The message here is the market's going to respond positively to the IBM release of numbers tomorrow. May not be the first initial instinct. Maybe it bounces down and tests that 182-ish level, but it wasn't able to bust it to the downside, and that's important because it's a nice 30-point trading range. So what we'll try to do, it'll try to bust it to the upside. Now, the real key as to whether or not it'll make its move all the way up in that $211 area is the mere fact that if you're taking a look at my chart here on Tiger TV, you can see that we have a very clearly defined descending price channel as it went in this consolidation area from its highs down to its lows. So the very first indication that IBM is going to bust out of this area and actually move to the top, and again, that top is about 210, will be a clear break. How about that? A clear break of that descending price channel that it is traveling within. But right now, the chart is set up for IBM to actually kind of do a bit of a pullback here, but it looks like this consolidation level is going to hold. So one could only be fortunate enough for IBM to come back one more time to that 182-ish range to give you the opportunity to take a nice long-term position. Now, if it breaks through that area, then, different story, because it'll be a 30-point move to the downside. And with IBM being the number one weighting inside of the Dow, that would basically spell curtains. But right now, the setup here is that it has rejected the consolidation lows, and that says it wants to trade to the consolidation highs. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's down 29 points. S&P is down 1. We were taking a look at IBM before the break. We're going to peek in on ExxonMobil. We were taking a look at IBM at that nice 30-point consolidation zone that it had been traveling in. Well, ExxonMobil has its own consolidation pattern as well. A nice 7-point trading range. It came down. It tested it. Did everything it was supposed to do. It tested on lighter volume. If you take a look at the swing point from April the 17th, that was 17 million shares. We saw a test of that on 13 million shares, and we saw 17 million shares off of the bottom, creating this little bear separating line, this little morning star pattern. That's a reversal signal, a bullish reversal signal at the bottom of a consolidation. You really can't ask for too much more than that. That's a 3-day reversal pattern. That's reversal sessions from October 8th, October 9th, and October the 10th out here. That says that ExxonMobil now wants to go ahead and revisit the highs. Now, it's going to have to first get through its most recent swing point, and that is the trading session of September 18th as well. Volume up there is 15 million shares, the bottom of which is $88.37, $89.87. If it clears that area, that'll give it clear sailing all the way up to where it broke down, which is really at the top of the consolidation range. So ExxonMobil looks like it is setting up a run to the 93.55 level. It, too, has done its work to the downside. It held. And so now it's time for ExxonMobil to run higher out there. Let's take a look at some of the other equities I have inside here. Google, let's go see what Google is doing. Google came back. It tested its hammer candle. That level held. It's the second test of the hammer. This is the hammer candle from the trading session of June 16th out there. It just shows you how dominant and why you want to be aware of where you have these bullish and or bearish reversal signals out here. That hammer candle on June 6th had volume of 2.5 million shares, tested it with 2.6 million shares, couldn't bust it down. What does that say? It says that Google here, now they're out with, well, I don't know when they're out with earnings. I've got to look that up. I don't recall here. But that area of support is very, very key inside of Google, 866.33. So if you're inside Google here, you know, it does not have an A to B equals CD down here as of yet. It has not taken out the swing point. If it can't take out the swing point, well, it's going to come back and it's going to test the swing point highs, and that's back in the September 19th area as well. That is at a price level about $8.95 to $9.05 in the market. Extra September 18th is really the day that we're paying attention to. The low of which is 903.97. So you get a close inside 903.97. That'll set up a run for the swing point. The most recent swing point high, that is inside of Google. Let's take a look here at let's look at Amazon. Haven't looked at Amazon here for a while right now. That's trading out at 308 and change. When we take a look at Amazon here, really nothing bearish about this stock chart at all. Let's see if this also took out a swing point on the way up. I'm looking at the swing point here. Now, it didn't take it out. That had volume, which was July 26. That had volume of 8.8 million shares, and it got over that level with lighter volume out here. So no confirmed A to B equals CD up or anything, but certainly nothing bearish about that stock chart. If we take a look at the weekly stock chart, we're looking at Amazon. AMZN is the ticker symbol, and boy, that's a strong looking chart, isn't it, folks? As we take a look at it, if we look for really any kind of bearish signal out here, you just have to point to last week. I know to many of you that might look like a hammer candle, but there was not a downtrend. A hammer candle only comes in a downtrend. What this really is, this is a bear sash candle. So if there's any kind of reversal signal on a weekly chart here inside Amazon, it was really last week's candle session out there. So that's why you want to make sure you understand your candle signals, because if you get confused by them, you can really, it'll certainly interfere with your trading out there. So that says that resistance is the high of October the 4th out there, but that's the only real bearish signal, and not too shabby, especially because that nice on the weekly chart, that wide-ranging bar from September 20th, that includes that September 18th date out there. And until you would see until you see a break of a swing point, which would be the August 30th level, 279.33. Nice little uptrend here inside of Amazon. So the stock chart here looks PDG, right? PDG, pretty darn good. Let me see what else I've got inside this little section here. We do have Apple, so let's take a look at Apple, see what it is doing. So Apple right now trading out at $4.99. It closed that window. So close that window. In fact, we're going to go take a look at the XLF here in a moment. We want to see how the XLF is actually trading. That says that Apple's going to try to take on the swing point from August 19th. That price is $513.74. 18 million shares are up there. Yesterday's volume about 9 million shares, so it's moving higher with lighter volume. What it's going to need to do is clear this little downdraft area where it broke down back on September the 10th. That'll also take it into that most recent swing point. But overall, on let's put Apple on a weekly chart, see what we see out here inside of Apple. Looks to me like it just simply, is heading. Sorry about that. It's heading for a higher price. Apple. So what Apple needs to do on a weekly basis, it needs to clear the resistance area that was set up by this gap down from the week of January 11th. The low of that session was 515.20. Gaps down the very next trading week, so opens up on Monday. The high during that entire week was 510.75. So that set up the window. Now the window area was tested on the following week, January 25th. It was also tested the week here of August 23rd. We can take this black line, we can slide it down a bit, so we can see that this area is a strong resistance area. Now, the importance of that, if you were in Apple, if you're trading Apple, what you want to see it do is you want to see it just get above that line of resistance. Why? Because it's been tested 1, to 3 times out there. It's 4 times out here, well, at least 3 times out here. So that's a strong area of resistance. And when you get above an area of resistance, old resistance becomes what? That's right. Old resistance becomes new support. And if we take a look at from the swing point high, it's at that 705.07 level, all the way down to the low that was put in April of 2013. That was down at 385.10. If you get above that, that says that it will want to go up to that next elevator floor, which is 582.84 inside of Apple. So it's got its work to do, which is to clear that 510-ish range. But once it gets above that line, that should then act as support, and that is in the Big Apple. And I would say on the weekly chart out here, as I take a look at this, the relative strength indicator out here, it's actually looking pretty darn strong. It's looking as if it's going to be able to take on that challenge, climb that mountain, and go up to the next peak inside of Apple. Let me see what else I've got inside this little area here. Microsoft. Let's go take a look at Microsoft. We know we had that Steve Ballmer, I'm leaving celebration day. Not exactly, I'm sure, what he was looking forward to, but that was on the trading session of August 23rd. That is where price is traveling into. Now, that had some volume up there, 225 million shares. Let me get rid of the squiggly lines. Those are the moving averages out here, and that will clear this up just a bit. So we're going to get rid of the 821, 50, and 200 out here. And we'll see, just like we took a look at inside Apple, it too has this area of resistance. Now, this has only been tested, we'll call it tested once, and that was tested once on that Steve Ballmer day. See, Microsoft had a big downdraft day. That was on the trading session of July 19th. 248 million shares to the downside. Tries to get up there, which it did on Ballmer Day. Did it with good volume, 225 million versus 248. Almost looks more like this is really setting up a sideways consolidation pattern in here, with the lows being that session from July 19th out at about the 31.02. So from 31.02 to about the $35 range looks like the consolidation level inside of Microsoft. However, if it closes the window, if it closes that window, gets above the low of 35.22 out there, that would be very bullish. That would be very positive. That line should then act as a line of support versus a line of resistance as we have right now. Let's go take a look at the currency pairs. Let's see what we have going on out here. Let's go take a look at the Queen, see what the Queen the Queen Bee is doing. Let's start off again. We'll take a look at the longer-term chart out here. We've got the weekly chart. Obviously, we're only into Tuesday, so we've got a long time here. But this weekly chart, we've been seeing it losing some energy. Take a look at last week. It was what's called a high wave candle out there. That is not used for support, resistance, or anything. It's just telling you that, in essence, it has lost its way. The week before was really kind of a draw with regard to a little draw when we take a look at who was in charge of the market. Of course, the trading session of September 20th said it was the bulls that were in charge of the market. This sets up a move higher. Unless we really see on a weekly chart, well, I would have to say if you can get back below the first target, if you're looking to be bearish on the euro U.S. dollar, would be getting back inside the lower part of its range, which we're going to call the June 21st high, which is 1.3415 out there. That's on the weekly chart. That's what you should be paying to at the close of Friday. We do take a look at the daily chart. It did form a little doji candle here yesterday. We're seeing some leaves fall off of the tree. It is autumn time. And so, again, this just really shows us that what the euro has done since Ben Bernanke Day is really just travel sideways. If you take a look at that consolidation zone out here, you'd have to say the consolidation looks just about like that. So right now you've got the euro trading down towards the bottom portion of that consolidation zone. Of course, a break of that area, and the consolidation zone, we're going to say, ranges from about 1.346 up to, we'll say, 1.361. And that is really the range, and any break of that area should be the next movement that you would see inside of the euro, to the upside or to the downside. Neither overbought nor oversold, so it's got room to run out there. Let's go take a look at the other currency pairs. Let's look at the Great British Pound, U.S. dollar. This thing has still an uncompleted A to B equals CD up. That would take into the 163 range out here, but we have seen some selling as it made its most recent swing point high. It did it with a little shooting star on October the 1st. that says that it's got some pretty stiff resistance at 1.625 out there. Of course, you then followed up on 2 trading sessions later with a bearish engulfing candle. That tells you you've got some sellers of the Great British Pound up here. We've seen some follow-through on that. If we take a look at just the last leg, what we have seen here is a move back to the dead cat bounce area, the 0.382 retracement level. So, and what we have seen as it's moved down here, we've seen it too have these smaller bodied candles. The message here is just simply that it's losing its strength with regard to selling. The sellers are up here at the 162 level. They are not down here right now where we're trading down at the 159-ish range. Now, what's important about paying attention to the Great British Pound and the Euro is their impact on the dollar and the metals out there. So if we go take a look here at the metals, I mentioned silver earlier. It looked like it was maybe forming a hammer candle because it had really regained most of its earlier losses. So let's go check in and see if, in fact, that is the case as we speak. Hey, the trading session is not over. Yeah, so there's a little hammer candle that you see inside of silver. If we were to finish here right around the 21.17, 21.18-ish range, now could actually close up at its session highs and still be a hammer. That would be up at the 21.32 range. Then you would have a 0.786 Gartley buy pattern. Even though it has lower price, $19.83, you would have a hammer candle, which would be telling you that you've, that's a reversal. We haven't seen any. You did see a bullish engulfing candle. I'll take that back right here on the trading session of October the 2nd out here. So you would have in this price area, this would be telling us here's where some bulls are out here trying to defend this general area when it comes to silver. Now, trading session isn't over, so this isn't a hammer candle until the day ends. But if it were to finish here, that would be a bullish sign out there. Not a bullish sign to go ahead and take a trade, because in this case here, you certainly want to get the patterns correct inside the euro, the pound, the yen, which means the U.S. dollar index as well. But this would be telling us we know where the bulls are defending their territory in silver, which is very helpful, because if they lose that area, that's assuming it's a hammer. We're just making a quick little assumption here as if it were to close here today. If you were to get a close below that, that would spell trouble. And what that would really spell when we take a look at trouble, that would say you're coming back and testing the low from June 28th out there, because that's really the next. You get a swing point, a little junior swing point back here on August the 7th. So I'd say you could come back and test that. That's right around 1910. You'd have to really hope for some good support there on the break of that hammer candle. That's if, in fact, it turns into a hammer. In the case of gold here, it's trading down $6. That is not a hammer candle. So a little subtlety there. That is not a hammer candle, so you're not seeing any kind of bullish sign yet inside of Goldilocks. Now, the bullish sign that you have seen is if we take a look at the lower wick here, you can see that the bulls have tried to move in, have found some buying opportunities. That's after taking a look at this 0.786 Gartley buy pattern, but until you really see reversal signal, folks, it's a dangerous thing to step into anything that has a longer-term trend to the downside, and that's exactly what gold and silver have when you take a look at their weekly charts out there. Let's go take a look here. I mentioned I wanted to look at the financial sector, so since I said I would do that, let's in fact do this. We'll do it real quickly here before we go to break. The XLF, which has been the weakest sector inside what I consider to be the weakest sector from a signal standpoint inside the S&P 500, had this little island top reversal. And yesterday, the XLF closed inside it by 1 penny. 1 penny. The area is 2040. Yesterday's close at 2041. Today, right now, it's trading at 2040. This thing closes well inside that island reversal. We're talking about a weak link, folks. This weak link would be saying, I ain't weak no more. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow is off 55 points. S&P down 4. Composite off 3. Go back to the XLF, the financial sector within inside the S&P 500. Now, if we take a look at this daily chart here, number one, the thing that should have stuck out to us, which it is because I've labeled it, is that island reversal pattern. Now, in order to have an island reversal, you need two gaps, at least two gaps. We had them here. You have the gap from September 13th up to September 16th out there. The high of the 13th was $20.23. The low on the 16th was $20.51. There's our gap. Then what's it do for an entire week? That entire week just forms a little bit of an island out here and then comes back to work on September 23rd and gaps down. That created our island top reversal, the most bearish of reversal patterns out here. Then prices push lower. They actually get through the trend line. They get through the channel line. Now, this is the price and channel. This is the channel and the trend line coming off of the November 16th area. That's the blue and the red lines. Break through that area. But you can see here last week on Wednesday, Thursday, Thursday and Friday, as well as yesterday, it has broken. The financials have broken back inside the rising price channel. But what they have also done is they've come to rescue all of those passengers. So right now they're docked up, and they're bringing folks on board to that big vessel. And if we do see, so the question is, at $20.41 versus $20.40, is in fact, that they does that go ahead and take the island and say it's no longer an island reversal? And technically you could say, yes, I'm going to give it at least more than a penny. So what we want to be watching for here, it's from weak information that we'll get from a weak area that we're going to get good information. So we want to be paying attention to the XLF, because if we see a close, well inside above the 2040 level, it'll tell you that one of the most bearish areas, one of the weakest sectors from a bearish reversal standpoint, is no longer weak out there, and that would be important. So right now, as we speak, the Dow is trading off 62 points. The S&P is down 5. The media is waiting for the GOP, the good old party, to come out and make some comments about whatever they're going to comment about, whether it is all for one and one for all, and let's end this nonsense, or whether they're going to say something else out here. If we take a look at the ES Mini out here, let's assume that the market responds poorly to whatever is said out here, no matter whether it's good or bad news. What we want to be watching for is this 1681.75-ish area. At 1683, that happens to be the dead cat bounce, the .382 retracement, off of the swing point low from 11:30 in the morning on October the 9th. That's at that 1640 level, and that's all the way up to the high that was put in here at 1709.75 at 20. That would be 8 p.m., and this is on October the 14th. This is last night. And so the normal retracement is to the .382 level. What we also see out here is what looks like is forming. The top part is formed pretty well of this rising price channel. The bottom, not so much, because I've only got really two candle patterns. But what's interesting is right at the bottom of where we've got drawn, in essence, this rising price, this potential rising price channel happens to be that 1683, 1682 level. So that's what you want to be watching for. If, in fact, the ES Mini cannot break 1681.75, that is where your next buying opportunity of this market that wants to move higher out there. So that's really the setup. We take a quick peek here at Basel's VIX index and see where that is. That is still above the 50-day exponential moving average, but not by much. It's trading at 1657. The 50-day is at 1557, $1. If you see that get below the 50-day moving average today, folks, it'll be all engines ahead. Thanks so much for being here. Stay tuned for Basil Chapman. It is Wonderful Wednesday. I believe Larry is not in, so I'm not sure what we're doing there. But then we've got Daryl Martin, David White, and the Tom O'Brien Show. Have a great Tuesday. Oh, today's Tuesday. Today we've got the option hour. Have a great Tuesday, folks.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest, at Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.